The head of regional banks research for Asia ex-Japan, Tom Quarmby, with us on First Up this morning. And Tom, before we take a look at European banks, you want to take a look at what's happening in South Korea first up, because this is making headlines today, talking about the government trying to offload its world finance stake once again. Third time, by the way, and they still can't find a probable buyer. What's going on with the South Korean banks?
Well, I guess it's coming across as a bit of a mixed message, where we still see the Korean government heavily involved in regulating the banking system in South Korea, but at the same time now looking to say, well, let's continue with privatization of those very same banks. I think the challenge in finding an investor is, one, locally, there's been a lot of consolidation in recent years, and two, for foreign banks, it's been a tough area to make good inroads and without interference. So it's going to be a challenging sale if it's to go ahead.
Oh, it will be a challenging sale. I mean, look at what happened to Korea Exchange Bank and the Lone Star stake, and how many trials did that take before they could actually find a buyer. And even, banking CEOs across Asia, big banking CEOs said that, because of the regulatory environment, why buy into Korea when you can't make margins with the government putting their hand there?
Yeah, well, these are big banks, and they require a lot of investment. And I think, ultimately the challenge for any CEO is, firstly justifying the growth outlook, which, is far lower than a lot of areas in Asia, and the big price tag, at least in nominal terms, that would be required.
Very big price tag. Okay, so talk to me also about these big China earnings as well on Friday. You had to stay up late because some of these earnings came out till like midnight on Friday. What did you make of them? What does it say about China's banks?
Well, we've got a good team in place doing the work late at night with Mei Yan, but the earnings still looking good coming through the first quarter. I think broadly in line with our analysts' expectations. So reasonably comfortable there, and not seeing the deterioration in asset quality that people had been concerned about, late last year. We still think there's a few challenges ahead. Fine-tuning of policy is really the key, rather than any big favourable changes in policy. And that means from a share price perspective, it's hard to see a lot of upside in these prices.
When you say favourable policy, are you talking about RRR cuts? Is that what you're highlighting?
Yeah, I think we're more looking around fine-tuning around certain areas of lending, so continued support for small business lending and lending to private enterprises, and really encouraging the banks to share a lot of the credit which has been going to the SOEs into the broader economy. Okay,
so what about Chinese banks? I mean, as a whole, are they a buy in your view?
As a whole, we would say Chinese banks are a buy in our view, but in the near term, we're still a little bit cautious about the lack of policy direction, as in big policy direction. We do think there's some deterioration in NPLs coming through, but not as significant as the market was expecting late last year. But overall, we still favour the big banks in China, ICBC and Construction Bank.
Yeah, that's what Mei Yan mentioned as well. So talk to me about this deleveraging that you keep talking about. EU banks deleveraging in the Asia Pacific. What's the impact?
Yeah.
Why would you care if you're in the Asia Pacific?
Well, I think at the end of the day, we look at it as a market share opportunity for big Asian lenders. So the banks with lots of liquidity, with cross-border lending capabilities, what they're seeing is that the European competition is moving away from these particularly long-term financing markets. So asset finance, project finance, syndicated loan markets. These guys are having trouble finding the funding and the capital to continue to support their growth in this region. So for banks like HSBC, Standard Chartered, for the Singaporean banks who are very liquid and very good at cross-border lending, I think this is an opportunity for them, and that's where we would see the major fallout or benefit from this deleveraging.
You like HSBC, you like Standard Chartered, but what I find really interesting is that you're underweight DBS, considering the big numbers they put in on Friday, and this Bank Danamon $7 billion deal.
Yeah. Well, we like what's happening at DBS, but we struggled a bit on valuation when the Danamon deal was announced. I think we struggled a bit to believe they could achieve the kind of accretive deal that they promised within 5 years. I think it's going to take longer. I think there's going to be some additional risks involved in terms of restructuring the Danamon operations. I don't think it's as straightforward as the market's giving them credit for.
Yeah, it seems that way, isn't it? Tom, thank you so much for your time this morning.